Hi there and welcome to another edition of Who Moved the Market. I'm your host, Surabhi Upadhyay. Now, you might have noticed that insurance stocks, particularly life insurance stocks, have had a pretty good run in the last several weeks. In fact, if you look at some of them, HDFC Life, we're talking about gains of 10 to 11% in the month of June alone. If you're looking at some others, like an ICICI Prudential Life, that stock has rallied 22% in the last 1 month. So what's happening? And more importantly, is this a durable rally? Should serious investors, medium-term investors be looking to get in now? Or is this a rally which you should perhaps stay away from? Well, those are the big questions to ask, and I'll be asking those questions and putting them to our guest on the show, Prakash Diwan. Prakash, thank you for joining in. Always fantastic having you on the show. So welcome to Who Moved the Market.
Thanks, Surabhi. I'm sure you've chosen the most relevant topic for today because I see insurance discussion, life insurance companies being discussed so actively.
Yeah.
Good to see that. Yeah.
Okay. So, well, Prakash, you have your task cut out because, I have the easier job. I'm simply asking the questions. I just want to dial back a little bit and remind viewers about what happened just after Budget 2023. And viewers, you'll remember that these stocks were sold as if life insurance companies are shutting down. That's because there was a tax change that happened on these large premium high-ticket policies where the tax incentive was taken away starting this year. Now, Prakash, from that time, these stocks had crashed to their 52-week lows. From that time, if you look at the February low, then the rally is breathtaking. I mean, we're talking 30-40% from those lows. So what's going on here?
So a very, very valid observation. End of the budget almost end of the financial year almost made us feel that it's going to be a very significant impact that 500,000 limit was taken away, was imposed, and only the lower ticket, transactions were eligible for tax benefits. But as the quarter pans out, and then we're just kind of drawing close to the first quarter after this new change, really speaking, there's not been much of an impact, and that's exactly what the market kind of sized up to, or woke up to. When you saw the data come through for VNB, which is value of new business from most other players, suddenly everybody sat up, took notice, saying, "Hey, the impact is probably less than 3-4%." And for the whole year, this, remember, on a yearly basis, this quarter is not one of the best, but you still had growth clocked by most of the large private sector players, and that gave the assurance that we are probably looking at this sector with a little bit of a very strong dose of skepticism. And that's where the move is correctional. So what you see is a pullback of sorts where most companies started correcting and people started adding them back again into the portfolio, especially the institutional investors. So and it's a very interesting space. I mean, just if you allow me to go back a bit, if you see the history of private sector insurance, which is now about 20 years, 2 decades, we've had this phases where they've done very well on the back of ULIPs. Then there was a little bit of a lull because regulatory changes happened. There's a lot of clampdown and things. And then the traditional products started doing well and they started picking up till this bummer of sorts on the perception on the budget announcement. So the sector behaves in a very cyclical way. In that sense, it's triggered by regulatory impact and changes. But overall, if you see, the direction is just upwards. So no institutional large investor can afford to miss out on allocation to this sector. You could have a choice between, out of the 3, 4, 5 names, you could probably choose 2 or 3, but you cannot not have those. So
Sure.
And look at this. Look at where we are. Nifty's already got HDFC Life as the most recent entrant. I wouldn't be surprised if you have one more name coming very soon. So this will keep on happening in terms of the sizable play that the sector has.
Okay, so I guess I get your point that long-term this sector does make a lot of sense, but you have to sort of analyze some of the companies individually and then decide whether you're getting the right entry points, the right valuation, etc. But Prakash, for those who are new investors into the insurance space, I'm taking, another step back and really going down to the basics, insurance stocks 101. And this is a technical space, and there are lots of new terms that are thrown up. It's not as simple as, revenue and margin and profit. So you tell us now, between tracking premium growth to tracking something known as the combined ratio, which is a measure of profitability, to looking at VNB, as you said, value of new business, Which are these measures that you look at carefully to determine, the health of that insurer, and then deciding, of course, whether the price is right or not? So which factors should investors watch out for when they want to learn more or, track these insurance stocks a little more closely?
Oh, yeah, absolutely. So that's a very valid question for the benefit of viewers. That the sector has a typical nuanced metric which we need to understand. So, for example, the most critical one that we look at is embedded value. Okay, now it can get mixed up in certain reports. You will see price to EV,
Yeah.
which can be mixed up as enterprise value as well, which is slightly different. Yeah.
Yeah.
So embedded value is actually the present value of the business that they are building up. So let's say when I get a customer as an insurance company, when I get a customer to sign up for 20 years of premium paying life, I already have that assurance that this is going to happen.
Yeah.
If it doesn't happen, all the money is anyways mine. I don't have
Yeah.
to settle any claims and all. But
Yeah.
which is a fantastic thing for companies that have longer dated term insurance products rather than short-lived 3-year, 5-year money back endowment stuff. So the nature of the product is what translates into superior embedded values. Value of new business is a very important metric to probably understand how the company is going on a quarter-on-quarter basis, on a month-on-month basis, market share dynamics. What is it that they are spending to acquire this new business? Are they incentivizing and spending much more on, on distribution? Those kind of things will make a big difference to the value of new business, and that translates into margins.
Sure.
So for example, the entire sector has a very tight range in which most players would have margins because of the regulatory nature of the business.
Right.
Yeah?
Right.
And you are also told that you will have to allocate this percentage in debt, this in gilts, this in equities, and all of that is very defined. So you really don't have any cowboy investing styles that I'm going to put everything into equities or
Right.
and take kind of undue risk. So by virtue of that, it's a very stable sector to follow and research and invest in, and that's one of the reasons why people do get confused. Everything looks good at some point, and everything looks not so good. So that's why the confusion is.
Yeah, got that. So one has to sort of get a little in deeper and understand some of these metrics and these measures. So Prakash, now let's come to the question. It's clear the market has probably made up its mind that it needs to look beyond tax incentives, and maybe the selling that we saw in February was overdone. And the market is looking at the longer term, prospects that you described. The question is, the stocks have already rallied quite a bit. So how are valuations looking now?
So, they might temporarily look stretched because, the earnings are yet to catch up, and there's more demand for this stock, for the scripts rather than, the supply. And none of them have come up with any fresh issuance or placements and all of that, So they're well capitalized in that sense. So the only money that they would need is through debt issuance. So that's one of the reasons why the valuations will look a bit stretched at some point in time, but then they'll correct. And I'll tell you what we need to look at. Look at what is changing within the insurance space. People who had taken it 20 years back are coming to a stage where they'll have to now decide on a new product. Okay, so
Right.
for example, if I took a term plan when I was in my late 30s, and the moment you are close to your mid 50s, you're looking at saying, hey, what do I buy next?
Yeah.
And when that particular segment comes to the market to buy something, it's going to be a lot of annuitization products which will start selling, and that's a big game. We have not spent much focus on annuitization within the insurance space, but insurance companies have some very good annuity products, particularly HDFC Life, LIC. They're right up there in terms of the superior products that they have. And annuitization is very high margin. You'll be surprised, single premium or deferred premium annuities could give you 40 to 50% margins.
Wow.
That's like huge. And in India, just to give you context, the annuity market currently stands at just close to about 7 billion, whereas in the UK it's about 49, China is 150 billion, and the US is far bigger. So there's a long runway. And with the NPS kind of getting itself to be now, the defined pension benefit scheme from the government getting eclipsed, you will have people coming into the need for annuitization is so severe because you don't have pensions if you're in the private sector.
Absolutely.
You even if you're in the government sector, you probably don't have a defined benefit kind of thing. You have a defined contribution product. So
Yeah.
there's lots that's happening there. I think the valuations to me don't look good if I start building in a 5 year, 6 year kind of a scenario. So the best way to do is when don't buy when there's a little bit of frenzy. Buy them when everybody's forgotten about them and they put on the back burner.
I think that's the golden rule of investing, right? Probably holds true across sectors, and probably that's when
Yes.
the maximum amount of money is also made. Okay, so fair point, and that's an important marker to keep an eye out on. I will look at the annuity products very, very carefully as well. You're right, we don't have, in private sector doesn't have pension, and so perhaps eventually these products will also pick up. So that's something to keep in mind. Now let's come to the stocks. Prakash, you did say that, maybe a basket approach is better here.
Yes.
But, do you have any favorites? SBI, for instance, SBI Life hasn't run as much as the others, as much as, let's say, an ICICI Pru, which is up some 22% in just 4-5 weeks. So private sector, public sector, LIC obviously hasn't done well at all because we've seen that in the premium growth numbers, right?
Yeah.
They're lagging month on
Yeah.
month. They keep lagging everybody else. Any thoughts on some of these individual businesses, individual companies?
No, absolutely, because that's more relevant for the portfolio. So SBI hasn't run up because it also didn't fall as much, given the fact that it had the least incidence of high ticket policies being sold. So it didn't really get hammered for the change in tax regulation. So that was one of the reasons. Whereas iPru had very high ticket dominance of high ticket policies, which actually was the reason why it was hammered and then it recovered. So if you look at, let's say, go back a bit and say, try matching it with the pre-COVID levels, because it was a normal state of thought in sense of growth and, what expectations people had from these products. From that perspective, most of them have grown in a very uniform way, barring HDFC Life, which has had a very superior growth in terms of the stock. Given that they have improved their margins much ahead of the industry. And the rest of the industry is also kind of catching up, right? The other day you had Ms. Vibha Padalkar on your show explaining what has happened to the business and how they're transforming it. I think they'll continue to be leaders in terms of margin accretion and in terms of the quality of the portfolio because they have a huge presence on the debt side and then they do very well on that. From a distribution angle, SBI is by far the biggest and has amazing reach. And in terms of marketing brilliance, I think nobody can match ICICI Pru. I mean, the kind of, the way they have this whole emotional platform on which they've always sold policy. In fact, ULIP as a category was created by them in India virtually. So, that's why I keep on saying a basket approach helps you for the simple reason that each of these companies comes with a very defined USP or some sort of a edge or strength, which keeps them ahead at times. Okay,
Sure.
now because of the long nature of the cycle of the industry, all of these trends will start playing out at some point or the other. So you buy an SBI, you buy an HDFC Life, and you buy an iPru in equal measure.
Okay.
I don't think you can go wrong if you have a 5 to 6 year horizon because the industry is growing and somewhere or the other they'll keep on performing well in those phases. So that's a reason why I keep on talking about a basket approach. As consumers, it could be very different. When you go to buy a policy, you have to look at very different things in terms of service, claim ratios, and all that. But as an investor in the business, I think all three businesses will make sense at some point in time. And I don't know when that happens, but I would buy these three for sure in equal measure.
Okay. The government names are conspicuous by their absence in your your selection of the three insurers, Prakash.
Yeah, I mean, it's because, I'm not that I have anything against the way LIC's done so well, but in fact, they have a hold to maturity portfolio, which will do very well with these changes in interest rates and all. But they're losing market share. They're now just about 70% plus of the overall pie. And remember, the next phase of competition is going to come from the digitized fintech or all of those kind of names. So you have ACO, which has been given, which has been allowed an IRFP this thing license. IRD is actually granted license to startups in this field, which is very surprising. But they want digitization to be the plank. They want more innovative products. They want the reach to increase. Government has a lofty plan of 2047 when everybody, the eligible population would get covered. So 100% coverage over the next 24 years. So, it's a long haul, but you will see the nature of the industry change very rapidly with digitization coming in. So watch for that. We'll probably select something out of that once they are out and, up and about. But at this point, I think these three names should suffice for allocation.
Got it. Got it. All right, Prakash, this has been a very, very helpful classroom, and I think we'll do several more to increase our awareness about
My pleasure.
insurance and, of course, keep an eye out on all of these stocks. Thank you very much for joining us on the show today.
Thanks, Surabhi. My pleasure.
All right, folks, with that, out of time on this edition of Who Moved the Market. Keep talking to us. Keep sending us your feedback, your comments, and your queries. We'll see you on the show again tomorrow.